Retail investors' biggest problem is they understand price, they don't understand value. The fundamental thing is that a lot of guys, they think they're investor, but they're actually speculators. Hard work is in understanding the company. If you don't understand, don't bother about it. It's out of your syllabus. Look at a company which you understand.
Let's say you're evaluating a company today. Are there any common 2-3 signs that you see that makes you feel like this will be a long-term wealth creator?
Business management and valuation, period. If I believe the growth rate in next 5 years is going to be 20%, I must buy less than 20p. If it is not available, take a walk. At 25%, in 3 years it will double. So at 25%, a rupee will become 10 rupee in 10 years. So in 20 years it will be 100 times. And in 30 years, 1,000. In 60 years, 1 million times.
Do you think that this war situation can escalate to a point that the markets don't recover for the next 5 to 10 years?
ऐसा तो हुआ नहीं अभी तक, लेकिन कुछ भी हो सकता है उसमें क्या है? I know one thing, world is not coming to an end. World is becoming prosperous. When the fire is there, people jump from here and then they kill themselves rather than going through the stairs and taking best chance.
Only optimists make money in the market.
God has made me die-hard optimist and a dreamer.
What is that one principle that you would say to someone who's starting to invest today that they should never forget?
Don't borrow to buy equity. If it goes to zero, then what happens? Loan will be on your head. You'll commit suicide.
Hello Raamdeo sir, it's a pleasure to be here. Welcome to Power Talks by Power of Money.
Welcome.
So sir, you've been often interviewed about your journey in the markets, your personal wealth creation journey. But what has not been spoken about as much is your wealth creation case studies. And of course, there's a whole lot of wisdom to be acquired from there. So we'll try to decode a little bit of that in this episode, if that's okay.
Yeah, most welcome.
Over the last 3 decades, your wealth creation case studies have, of course, analyzed thousands of companies to answer the one simple question that how does wealth actually get created? So what is that one pattern that you have seen emerge again and again?
The companies keep coming and going, and there'll be waves of. There is always some company or other is creating wealth, and some old wealth creators also going down. So that's a pattern, So there's no perpetual wealth creators. Some of them, they are very kind of die hard, but basically the crop keeps changing. The top ones also, the fastest ones. When it comes to the fastest, every time, every year it's a different name. Among the biggest, I think there is much more consistency. Like say ONGC will be for 5 years, Hindustan Lever will be for 5 years. Then suddenly HDFC will come. Then Reliance will be 5-6 years.
Right.
So like that, so there will be a lot more consistency in large wealth creating companies. But the fast ones, they definitely vanish next year. So that has been the case. But as far as the overriding principles are concerned, I think in 2013-14, we then coded QGLP. So the biggest gift to any investor is to find his own proprietary investment philosophy or formula or recipe, you can say. I would say after 20 years of study, I could say that, boss, this is the pattern.
So you came,
QGLP.
So you made QGLP then?
QGLP. Then, I don't know what got into me, and we wrote that piece. It was a wealth creation study done, and then we said, let's put it as a quality and growth. And then we said, let's put it full, QGLP, quality, growth, longevity at reasonable price. So that, in fact, after 11 years, to be honest with me, I could say that this damn thing is useless and put it on the corner. Let's not pursue this. No, but it works so brilliant. When you keep getting confused in investing any point of time. Any company, you look at it, and it's a big challenge. Like always, I have 1 or 2 companies under my scanner. So the way to go about one by one, quality, growth, longevity, and more I'm becoming aligned to QGLP than anything else.
So according to you, QGLP framework has stood the test of time?
Yes.
So what are those 2-3 early signs that you see in, let's say you're evaluating a company today. Are there any common 2-3 signs that you see that makes you feel like this will be a long-term wealth creator?
See, basically 2 things. Business management and valuation. Period. Okay, so when you see business excitement, typically it starts with the business excitement. See, you're seeing that, say AI is coming big way. Okay, who is big in that? So right now I'm not in that segment. Say automotive is going to be very large. Very large. You got roti, kapda, makan, and then gaddi. So सबको गाड़ी चाहिए.
Right.
So and we don't have गाड़ी. मतलब ये सब कार बहुत कम है यहाँ पर, बहुत कम है. Like we produce about 5 million cars. China produces 30 million cars. So in next 15 years, 17, 20 years, we will produce 20-25 million cars. And how many companies are there? There are only 3 companies. Maruti, Hyundai and Tatas. There are only 3 companies. तो अभी समझिए कि अपने क्या करने का है. So only 3 companies I have to appraise. Which company to invest? And are they available at reasonable price? These are all old economy.
Right.
Very doable. Do it. So that's how, when I think that car companies are going to make a lot of money, then I look for one of these companies.
Understood.
And then then finally you finish your research.
So you've also gone on to say that back in 1996 you sold off HDFC and you regret that.
क्या सब storytelling है, in the sense that those things happened.
Right.
अब उसके कारण से थोड़े ना हमने पैसे नहीं बनाए. We are rich. We have made money. That money, nobody asked where the money went. I also don't know where the money went, but I must have bought something else. Maybe I must have bought Hero MotoCorp or I must have bought Bharti. For that also money has to come, no? So, and good thing is that in India you have, for everything you have stocks. Everything you have stocks. So today, okay, you sell out of say IT and you get into banks, you can get into fintechs, you can get into whole lot of things happening. Auto companies, they're booming. So there is no dearth of 5-10 ideas for retail guys. Just that they want to, some other guy is making too much of money. Arey bhai, gold, silver, that's not my mandate at all. Yeah. Gold, silver was out of my kind of horizon. So why do I bother about it? Somebody said coal price has gone up by 3 times. Do you have coal? It doesn't belong to here. Something other is going up or down somewhere.
Yeah.
So you have to think like that.
Yeah.
And
you can't stay in a state of constant fear of missing out.
No, I mean, see, somebody was very insightful about gold, they bought it.
Right.
Few kgs or few tons of gold, they might have bought it. But that's not I never looked at gold like that. And I don't want to buy something which doesn't produce anything. Today gold is at 3 times of replacement price. Today new mines are minting gold at about $1,500-$1,600. Your price is about $5,000. How long of course there is some other central government and fiat currency and all those rumors are there. But at $5,000, I think all the closed mines will start and they'll start minting at maybe $2,000. So I would think that it should, when the world, becomes a little more peaceful, it can't remain as heightened as VIX high, this thing, it will come down. VIX at 2022, it means there is a lot of fear in the system. The moment fear, subsides, we'll find a time when there is no risk. Markets are very straight and all. That time you see the gold and all these kind of risk assets being close to their replacement cost rather than this kind of premium prices.
Right.
See, every company has some bad news, some good news. At the end of it, I mean, is that company doing? First thing is, what is your level of understanding? Second is that how the valuation is shaping up. When the bad news come, I mean, one is that it could be rumor, it could be reality. Yes, there is a reality.
Right.
Now the issue is that how bad it is. Is it a completely backbreaking? In the sense that now it has become uninvestable. Then you take your loss and move. Or reduction of profit and move. But the actually franchise is not at all touched. And the stock has come below the fair price. Then if you have courage, you can go and double down. See, there are only 2 types of companies. Large, unpopular or small growth companies. So you are talking about the companies which are large, but now it has become unpopular. Like HDFC Bank has become now. Large, unpopular. Your Infosys, TCS, they're all trading below their average prices. Do you have that superior understanding of future of them? Go and bet.
I mean, it's very difficult for a retail investor to know the insides of any company.
But when you say retail investor, he should remain within his own set of circle of competence. Why bother about some fancy stuff? Right. NVIDIA and all are not their syllabus. You want to help them make money everywhere. I understand, but it is tough. He must realize what he can do.
So one of the things that I've also heard you say is that a lot of investors don't understand compounding.
That, of course.
We know it as a
not
concept.
Investors. The world doesn't understand. If there are a million investors, I'll be surprised even a lakh guy knows. Even 5% don't know. And I went to best of the places. Then see, they know the concept, they can do with a calculator.
Yeah.
But how does it sitting
Work out in
across
reality.
and day out? How do you think about companies without knowing the compounding in head?
Right.
So you need mental compounding to understand how the compounding works, how you look at quality yourself, how you look at growth yourself, how you look at longevity, how do you judge the management, how do you judge the business.
Like you said, sir, that there are the long-term wealth creators, and then there are the fast ones, which might give you returns for like a year or two, and then they will vanish. How can investors really identify them, and what is because there's a lot of noise in the market also, but what kind of signals should investors trust?
So you start with QGLP, you buy companies which are investable, and you invest. See, there's a difference between invest and speculation. So the fundamental thing is that a lot of guys, they think they're investors, but they're actually speculators. So basically, speculation means if you buy the stock and hold it for even a year, but you buy only with the intention that price will go up, then you are actually you are a kind of a soft speculator, in the sense that you don't bother about the enhancement in the value of the asset. See, the true investor is looking for enhancement in the value of the underlying intrinsic value of the company.
Right.
And when the intrinsic value of the company goes up, obviously the price of the stock also goes up. So price of the stock is a resultant rather than the key, core of what you're investing in.
Right.
So one famous saying, and one of the biggest thing I realized over last 30-40 years, everybody knows the price, nobody knows value. Nobody means, I would think about 99% people don't know the value. 1% people know value, and those are the researchers or the owners of the company or smart guys, those who are good in investing. And that's why if you go to the market, if everybody knows the price, so you don't have any advantage in knowing the price.
Right.
The only advantage is if you know the underlying value. You might think this chair is worth $1,000. I think it is worth $20,000 because it carries particular technology or brand or whatever. So that's where the game is. At $5,000, you say it is very expensive. I'll say it is grossly underpriced. So that's how you buy the. I mean, if you understand the value, it's a cakewalk in the stock market.
But there is once in a while, there will be this disruption in the industry that will happen, right? For example, what is happening with IT right now, that a lot of your bigger IT stocks are falling because of this fear around AI that is happening. How can investors navigate such a situation? Because, how can they know that this is a Kodak moment or not?
Say you're an employee of, say, Infosys or TCS, you got it literally for free of cost. 20 years back, it has become 10 crores worth or 20 crores worth. Now to take a decision at this moment, it has been your most faithful kind of a portfolio member, and suddenly there's so much of chaos around. So those kind of guys, they have a problem. But otherwise, people like us who go and buy in the market, if I don't understand, it doesn't belong to me. See, one of the best things Buffett said is that do what you understand.
Yeah.
So if you don't understand, if it is not within your circle of competence, you thought it is within circle of competence, and now you don't understand where the stock is headed. I call it is it headwinded or tailwinded? See, many times you don't know underlying what's happening, but I can see clearly through the result and the challenges and whatever is the noise that it is headwinded. It is definitely not tailwinded. If it is headwinded, I would rather stay away. I'm not saying I'm right or wrong. I wish the entire sector grows at 25% and everybody mints money.
But then what is your stance on IT?
I'm saying it is headwinded. So I would stay away.
Okay.
I would stay away, or if I know a specific company which is going to do well, then I may invest. But basically, any sector which is headwinded, that too globally headwinded, technology-led headwinded, they were the beneficiary. See, look at the evolution of IT. In 95, 96, there was nothing actually. Even Satyam was making loss. Infosys were tiny. Their IPO had failed. Nobody bothered about IT. I didn't know who is Narayana Murthy. Okay, in 6 years' time, they became the global giants. Why? Because of massive tailwind of Y2K. Okay, today there is a massive tailwind of AI. So I don't know how deep it will be, how big it will be, in what shape they will leave them. Will they leave them actually more prosperous, more energetic, more innovators?
Right.
I have no idea. But right now, it looks they are there is a headwind.
Yeah. So you can only act on the current signals in the
current
market.
signal, because I have enough other sectors where there is a tailwinds going. So I'm an investor. I don't have any emotional connect with anybody.
So which sectors today, according to you, is there tailwinds in?
Say like because of GST cut, you have automotive, which is all the consumption, all the GST sensitive sector, I would say. Wherever GST mattered, like all the insurance have gone zero from 18 to zero. So, I mean, you see, go and see the volumes growth. You see in automotive 2020, I mean, everywhere 20-25% growth is there. So those are sectors which are tailwinded. If something is growing at 20% volume, and they can keep growing in India because penetration levels are so low,
right,
that it can go on for 10 years, 15 years. So you have to go and figure out then which sector has a perpetual kind of growth and which sector is only 4 quarters growth. And then whether the economics match with that or not. Then it's matter of research. But you are fundamentally starting at a place where there is a tailwind. That is not the end of it. It's just the starting point. Then you have to go and see QGLP full.
Are there any categories or themes that you think are like don't miss opportunities for the next 10 to 15 years?
Yeah, biggest opportunity is to remain invested in the market. See, these things, these times can scare you. But what I see, the local macro and global macro also, despite all the challenges, world will become very rich. World has been becoming rich at the rate of 7% across the world in last 20, 25, 30 years. I don't see any reason why the world will not become again doubler in next 10 years. Right now it is $140, $145 trillion market cap. In next, by 2035, it should be about 300 trillion market cap.
Okay. And out of that, India
would be about, say, right now we are at 5.
Right.
In 10 years' time, we could be about maybe 12, 13, 14, 15, depending on what. So macro is that it's a continuously, enriching market. I mean, the wealth has been growing worldwide as well as in India. And the fastest growth at a country level is in India. In dollar terms, I'm saying, or not even rupee terms. So now the game is how do you find your QGLP candidates? There is a tailwind. There is an opportunity, but you have to win your game your way. So it's a very rich place to play, but you have to find your way of winning.
Understood. So, sir, when it comes to, of course, the last 18 months or so, the markets have mostly been flat, right? And of course, with the war situation and everything, they're in fact, suffering a little more in the last couple of weeks. Do you think the valuations are finally fair for, especially in mid caps and small caps?
See, stock-wise, there could be still some more way to go. But I think market-wise, if you look at the broad market, which is about at 25,000 and about 1,200 rupees the index, EPS TTM for Nifty. So we are at 20 and a half times kind of thing. And long-term average is about 18 to 20. So we are done in the sense that, and I can see values emerging, not across, but I mean, like if you see your largest of the banks, they are available at 10 to 15 P multiple TTM. What more can you ask for? So I can see a lot of, say, even automotive giants like, say, Mahindra, is available TTM 22, 23 times. So, I mean, can it correct? Yes, they can all correct. But what I'm saying is that now values are visible and markets are much more, I would say, fairly valued now than, say, maybe 6 months before.
So, how do you think India currently stands versus global markets in terms of valuations?
See, every market has its own valuation. See, world is around 20 PE. I mean, US is the capital market. 50-60% of the world is US. They are trading at 20, 22 times, 23 times. I mean, depending on which index you take. If you take Nasdaq, they are at 40%, 40 PE. You take S&P 500, they would be about 23, 24 times. So I would think that, that's the starting point. The valuation starts from US. So they are at about 20 plus, 22, 23 times. So we are at 20 half. So
comparable.
Very comparable. But now nobody wants to compare India with US. They want to compare with China, Indonesia, Korea. Then all this tamasha starts.
Okay.
But we are world class actually in terms of size of the capital market, diversity, the legacy, what we have done. See, what will happen in future, people can keep saying. But what has happened in last 25 years? In last 30 years, between Korea, us and Hong Kong, we are up 8.5 times in dollar terms. Korea is up 3.5 times. Hang Seng is up 2.5 times. You decide where you want to go.
So I actually also wanted to ask you that, of course, everyone believes in the India growth story and India is going to grow. But does that automatically also mean that there will be, continued high returns in the equity markets also? Then?
High returns means, see, the trend growth return has been about 12%, 12
Right.
to 13% at an index level. Nifty, I'm talking about.
Right.
I don't see any reason why it will not continue. You know, if you buy it, say 26,000. If you buy at 26,000, in next 5 year return will be maybe not 12%, maybe 10%. But if you buy again at 22, 23,000, then again you go back to a trend return of 12%. Or maybe if the market corrects a little more, 20,000, then your trend return in next 5 years will become 15, 16%. And if it goes to 18, then, because see, index will
That
go where
would be
it
a
has to go
massive
to.
correction.
Yeah, so that will be massive correction, but
Right.
we don't have any control over corrections and all. You know, so that's what the opportunity is. You know, the corrected market is the biggest opportunity. I'm saying today market is corrected.
Right.
Can it correct more? I have no
Exactly.
idea.
Because
I have no idea.
where do you know the bottom is?
Is made for fools and liars. If you know a company which you want to buy and it is available, say you wanted to buy at 15 PE and today it is available at 12, go and buy. Will it go to 10? Definitely. Once you are buying, definitely it will go to 10. Okay. So, but then that's it. You have to, I mean, you can never get the bottom. Never get the bottom. And I don't aspire to get bottom. If I'm getting a company growing at 25% and I'm getting at 15, 17 multiple, I would rather go and check whether growth is going to be 25 or not rather than the price.
Right. Because value over price.
Yeah, it's a value. It's a deep value.
Right.
25% growth company you're getting at 15 multiple. Better check the growth rate rather than the price.
So also curious to know, sir, do you think that India will create any long-term wealth creators in AI also, or do you think that the traditional sectors will continue to dominate?
Keep me out of that because I have no idea what the hell is this. And it's too early stage and we don't have many proxies here. We are not technology provider, we are user. So I'm quite sure India will extensively use it. If there's one country which is going to be leading user, is
the
going to be India.
Adoption is
going
already
to be very
extremely
rapid.
high in India.
Everywhere you see in OpenAI and all, ChatGPT and all, highest number of subscribers are from India.
Right.
So clearly the diffusion is going to be very fast in India. Now, how much the enterprises, see, individual level, there's a lot of fun. You're getting your essays done or a letter writing done, editing done. So those things are fine. But actually at enterprise level, can you, I mean, how exactly the companies effectively use it in terms of increasing their revenue or reducing the cost, optimizing logistics, I mean, medical innovations and all. So those things are going to be a little long term and you'll get to see actual result of that.
Only in the next
right
few
now
years.
we are hearing very superficial things.
Right.
So, I mean, everybody's saying, I hear to Jensen. The only guy I listen to is Jensen Huang of NVIDIA. Whatever he says, like today also he said something. So he's saying that this is a history in making. So I'm sure it is very big. Americans are not fools, or the world is not fool. I may be a fool in the sense that I don't have capability. It is beyond my circle of competence. I'm not a techie, and so you come from Bangalore. Probably you have better friends who know about AI. Yeah,
you can still not say with confidence where AI is going to
that's
lead.
What.
Right. Would you also advise that, of course, you spoke about NVIDIA and a lot of these US companies are also doing extremely well. Do you think that an Indian investor today should have exposure to global markets also? And if yes, which ones?
One is that India is the fastest growing capital market in the world. And so if I am from India, why do I have to go anywhere else? But despite that, no, I'm not happy with India, then go to US and sink your money there, right at the top. So, the best, most prosperous and always it will be very deep will be US. And second is India. I would not venture anywhere else.
So coming to QGLP also, I think there's a strong philosophy in QGLP that a few strong companies is going to create a disproportionate amount of wealth. So do you believe in extreme concentration and not diversification? And is that how do you think Motilal Oswal also operates as an AMC?
So every individual has very limited amount of money, whereas mutual funds have a lot of money. So when mutual funds, they run 20,000, 30,000, 40,000 crores on their single scheme, they have to be diversified. And our mid-cap fund is at 35,000 crores. Now, first thing is it is a mid-cap. And then on top of it, you have 35,000. So obviously, you have to diversify a lot more than a mid-cap fund run by me or you individually. I can do with 5, 7, 10 stocks. But the fund manager has to buy 30, 35 stocks.
Motilal Midcap is still one of the more concentrated, I would say.
So we have always In fact, we used to run focus series after reading Buffett. Buffett's one of the biggest thing was don't have too many stocks. Okay, so I had 225 stocks in 95 when I read him first. And after reading that, I brought it down to 15. So since then, we have never been, 80, 90, 100 stock portfolio. No. So we always focused on, we believed in focus. And depending on what is practical and what the fund requires, you have those kind of like number of stocks.
Right.
Otherwise, our series was focus 25, focus 30, focus 35. That's how we started.
Understood. But at the same time, when certain holdings in a concentrated portfolio start to underperform, how do you navigate a situation like that in a mutual fund?
Unfortunately, I'm not a mutual fund manager. I have not managed actually. I have overseen people managing under me, but mutual fund management is a very different ballgame. Because you have a zero cost entry exit in the sense that there's no taxation, there's no so you have that liberty, and you are so you can do a lot of things which you don't do in private portfolio. So I've been a very private portfolio investor. It is buy and hold, few stocks. You work deeply with them. In fact, so much so that I end up making very personal relationship with the management over a period of time. If you remain investor for 5-10 years, they find that probably we are the only guys who are there for such a long period. So then they start knowing us. We start building relationship.
Okay.
So that's how. I'm more about focused and buy and hold, buy right, sit tight. Of course, we end up buying wrong also. Then then after 2-3 years, you have to clean it up. So, but then mine is very simple at a private level.
Sir, also the wealth creation studies have consistently highlighted that high-quality compounders are the biggest creators of long-term wealth. But there have also been periods where cyclical sectors like metals or even PSUs delivered massive returns in a short time. So, do you think that cyclical sectors are underestimated?
So cyclicals have, you have to buy when they are out of fashion, and you have to sell when it is very fashionable. You have to absolutely play contra. When nobody is looking at them, when the even promoter hates to look at them, that's the point of time to buy. When the aluminum prices are at $1,200, $1,400, $1,500 per ton, that time, companies struggling they're making the best aluminum in the world, but still struggling to make profits. That's the time to buy. Because one day, because nobody will put up aluminum capacity, and then there will be shortage because the world is growing and demand is growing.
Right.
So when the demand comes, then it takes a lot of time to set it up, maybe 5 years, 7 years. So during that period, the aluminum price goes to where it should be, from 1,500 to maybe 3,000, 3,500. They make tons of money. So, but then the moment they make tons of money, a lot of capacities come in, and they again depress it to below what is profitable.
So exit at the peak.
Yeah. So but then it is very difficult for people like us to practice counter-cycle kind of investing.
Correct.
When things are making losses, you go and buy. Of course, stock is a hell of a cheap. And when things are making roaring profit, that time go and sell your stuff. So that's the way to make money out of commodity companies or cyclical companies. I'm not well designed for that. The people have that kind of mindset. There are different kind of practitioners. They are able to do it.
You've also spoken about, I think, Warren Buffett has had written that sort of not essay, but like in his note, the great, good, and gruesome companies, right? Yeah. But exactly. But then, how do retail investors really differentiate between when the price of a stock is down? Then is it available for cheap because it's bad, or because it's just a missed opportunity right now?
So same. This is 2007 annual letter, page 6 and 7. Great, good, gruesome. So that is the foundation of investing. Even QGLP is 78 years from that particular piece. I'm inspired by that. So in that, the first line is do what you understand. So retail investors' biggest problem is they understand price, they don't understand value. And it's not a retail investor problem. It is anybody who wants to make money out of market. That's the issue. That hard work is in understanding the company. If you don't understand, don't bother about it. It's out of your syllabus. Look at a company which you understand. So the guy who has a profession of pharmacy, he wants to make money out of IT. The IT guy wants to make money out of aluminum. You can imagine what happens.
Because investors don't want to restrict their investing opportunities. And what they
I
know is very
understand-
little.
I understand that, but still, there has to be some sanity. If you don't,
Right.
if you're not understanding, like AI is beyond my syllabus, so I would stay away. I would just stay away, and that keeps you in very good shape, because what you have, you should be knowing them rather than what you don't have.
Right.
So that actually sticking to a circle of competence or skill is sticking to what you know, what you understand. That and not only in investing, any walk of life, that keeps at least me very peaceful, very, very peaceful. Otherwise, the world is chaotic. So many invites are coming, so many events are happening. Somebody saying, come here for inauguration, and somebody, boss, nahi karne ka mera kuch bhi. I have this much time and I want to just be here. So then you can keep walking where you want to walk. Otherwise, you'll be nowhere. So it is very important that, and there's so much of noise, and the world is becoming so integrated. One can invest in Vietnam, one can invest in Venezuela.
Problem of plenty.
Problem of plenty. So where do I buy? So then you step out of India. Then, 1,000 times bigger market opens up.
Right.
So your chaos is 1,000 times bigger, and your knowledge level goes out 1,000th.
Right.
So you imagine what happens. You will be killed, I'm telling you. You'll do disaster of your investing.
Right.
So you have to be very careful. Investing at one level is very simple. Making 15% is far more simpler. And making 18% requires lot of intelligence. And making 25% makes you Rakesh Ninwala. There are very few. So you have to be you must understand what is your ask. If your ask is 25%, I have no solutions. Then you have to find it yourself. You have to become that unique, So my portfolio does about 18% on a longer term basis. I'm not in 25% class.
You speak about reasonable price, buying a company at a reasonable price. But there are a lot of companies like Amazon that started out as expensive loss-making companies. So how does the framework adapt to businesses like that?
Yeah, so in those kind of places, QGLP, broad thought process remains same.
Right.
But it is more designed for the profitable growing companies. This QGLP framework, which is much more numerical. But you can use still QGLP. See, the point is the valuation techniques will be different. Say like in quick commerce.
Exactly, like QCom in India now.
Now there is no profit.
Right.
So how do you value? Does it mean that it doesn't have any value? It has value. So we use price to sales. And there are comparable prices. DMart has price to sales of 4. Your Zomato, Blinkit, they have price to sales of 2.5 times. Zepto is available at 1.5 times sales. So would you like to pay that kind of valuation? That's how I look at it.
And what would be your, advice maybe on metals like gold and silver today? Because market equity is down right now, and of course, anyone who holds gold and silver today is feeling a little more comfortable. But those who did not buy gold and silver until now, but are feeling uncomfortable with equities now, do you think they should buy gold and silver?
If they're not bought it earlier, if you didn't get the insight to buy, say, at 1/3 of the price, then don't even venture to get in. My sense is
this is not a good time.
People will have a serious loss out of them. I think that the gold, silver prices will collapse at some point of time.
So the PE multiples are way higher now than they were before, historically, right? And especially in small caps. So where do you really draw the line when it comes to paying a premium now?
If I believe the growth rate in next 5 years is going to be 20%, I must buy less than 20p, period. If it is not available, take a walk. I'll look for something else. First thing I must understand, see, in quick commerce, it is a grocery business, yeah. You run your house with those quick commerce, So day before only, I was going through some test. I needed glucose. They needed glucose. In 8 minutes, I got glucose from Zepto. 8 minutes while the guy is sitting there. How is it possible otherwise? I go by car. Personally, I go by car and go down to the pharmacy, come back. It will take at least 40-45 minutes. And the guy is charging nothing but just the MRP. In fact, on that also they are giving discount. So I think grocery will be bought only in quick commerce.
Yeah.
What is the size of the grocery market? 100 lakh crores. If they capture 20-25%.
And people will be okay to pay premium also after a point. Because of habit formation.
That's where they'll make money.
Correct, yes.
So habit formation is going on right now.
Correct.
and it'll be, each company will be 10 lakh crores.
Yeah.
They're available for a few thousand crores, मतलब 50-60,000 crores. Whether they survive or not, वो सब समझने का है. So it's not a proper investing. It is little speculative in character. It's not QGLP classic.
Right. But you're betting on the future profits
Future,
because,
yeah. So one or
because
two
of
you
the
have to
trends
try.
that you're able to see.
Till you get hit, you
Right.
try some.
Right. So as someone who spent like 40 years in the markets now, right? I mean, I think it started Motilal Oswal in 1987. What is that one principle that you would say to someone who's starting to invest today that they should never forget?
Don't borrow to buy equity.
I've actually heard a lot of that.
Yeah.
A lot of people have taken loans to, make investments.
It will be disaster. See, that's the speculation. You're leveraging something which can go to zero. If it goes to zero, then what happens? Loan will be on your head. You'll commit suicide. See, investing is fun. And if you are good, that small amount of your own capital will make so much of money. A stock can be 1000x, 2000x. If you are a little lucky and smart and lucky. You have to be first smart, do your job. Market will give you some unusual benefits. Some tailwind comes which we never thought. I bought Eicher thinking that I'm buying a emerging truck company, Eicher Trucks.
Right.
They were doing well. I also knew that there is a Fatfadia company outside there. But what happened? After I bought, this Royal Enfield became rage. So I made money not out of trucks. I made money out of the motorcycle. But I had bought fundamentally the company at a very low price. Some 8-10,000 crores market cap, which became 1 lakh crores and now it is 2 lakh crores. See what happens later. See, I buy for double in 3 years.
Okay.
Always, we never buy as a multibagger. I always buy all the stocks I bought as a doubler in 3 years.
So 25%.
25%. Now you know. 15% of the market itself gives. If you want to make 15%, you go and buy index. But if you want to make 25%, there, you have to keep looking for which company, superior business, superior company, and superior valuation. When all three come together, you have a chance of making multibagger.
Understood. Okay. But anything else that, understood on the, don't take loans and invest, but maybe something around temperament that when the markets are low, when the markets are very high, people keep investing. When the markets are low, of course, they feel anxiety and they withdraw. Anything to them would you like to say?
See, I've been an investor throughout. I'm not a timer. At top of the market also, I'm fully invested. At the bottom of the market, I'm fully invested. It has done well for me. I think if I'm not wrong,
so do
out
you
of
think
45 years, out of 45
is,
years, I think there are 8 or 9 years which are negative. So I missed, those are the painful years for me. The rest all 36 I have done well. So which one you want? 36 out of 45 is good. Good score, isn't it?
It's difficult to remember that, I think, for a lot of investors who, when the market is down.
But maybe over a period of time, I also don't like the market. Yesterday I was feeling very bad when market was down 3.5%. I didn't do anything, but just psychologically, it did impact me. But up and down of the market is part of the life. And I have seen 3 cuts of 60%, 60% and 50%. And COVID, another 30%. But good thing about Indian market is whatever is a cut, in 12 months time, again, it comes back to the full price. So you have to go through that pain of 1 year and remain invested.
So that's the positive message, but that in the next 1 year, next 3 years, the markets will always recover and give you good returns.
Always come back. Whatever is the bottom now, or maybe in few months' time, you see in 1 year's time, it will be all-time new high.
But any time in these 40 years or so that made you feel really anxious about the markets being down?
2002-03. Post 9/11, things were... I bought Infosys at $1,000. I saw a price of 11,000 and sold at 2,000. That time I was feeling that world is disintegrating, deglobalization is happening. All those emotional things were coming in for some time, But then again, we rolled up the sleeves and said, boss, forget it. Let's move on.
But then you saw enough times that the market
that
always
was second
recovers.
time for me. 92 was collapse, but that time we were kid. Portfolio was small.
Right.
In 2000, our portfolio was slightly bigger, maybe 100, 200 crore, 100, 150 crores.
So things were far more serious.
So far more serious in terms of not so much, because we started with zero. So any amount of loss is no loss for me. I never lever up. So 100 can go to, most severe it can go to, 100 can go to 35, 30. That itself is a lot of money. you know. So I have, see, one of the function of the stock market is you come here for what? For financial independence.
Right.
You know, if I'm a kid starting from college, I want to become a little rich. So much I'm financially independent. That was the objective with which we came to the market. And here we are not only independent, we are super independent. So it doesn't matter now. Now it's a game.
But what made you so interested in stock markets back then, sir?
I don't know. I was a dreamer, actually. I used to read a lot of fiction. So I used to read one, I don't know from where I picked up, from Circular Library, one author, Paul Edman. So he wrote in early 80s, $1 billion show thing. First book I read was $1 billion show thing. See, that time billion was almost like a trillion of now.
Right,
in
right.
early
Sure.
80s. Then he wrote Silver Bear, the Hunt Brother thing. Then he wrote Zero Coupon Bond. These three books, I think, kind of fantasize me to say that there's a lot of money to be made in the markets. So I started building my competence in stock market right from 1980, 81. I started reading balance sheets. That time books were not available. So I started reading a lot of balance. I used to manage around 250 companies' balance sheet. So when I got the first job in 85, I went with 200 balance sheet to my job. He himself didn't have that many balance sheets. So, that kind of madness.
So, firstly, do you think that the markets are always going to grow? And secondly, do you think that this war situation can escalate to a point that the markets don't recover for the next 5 to 10 years?
ऐसा तो हुआ नहीं अभी तक, लेकिन कुछ भी हो सकता है उसमें क्या है? Anything is possible. I mean, if you take the oil to say 150, I mean at 125 also it will be breaking point. If it goes there and touches come back, does not. But if it fundamentally stays for a year or so, I think there will be global recession. So there will be challenge. There will be some winners of that also.
Right.
And we'll get stocks very cheap, because I know one thing, that the oil cannot stay there forever. But because of that, if I'm able to get at 5-6 P multiple, of course my portfolio will also suffer. But at that price, we'll amass something. We'll convert that challenge into opportunity.
Right.
What else can I do? I don't sell now to fear that the world is coming to an end. I know one thing, world is not coming to an end. World is becoming prosperous. So it is all your belief, isn't it? It's all belief. If you think world is going to come to an end, people jump, when the fire is there, people jump from here, thinking that the world, and then they kill themselves, rather than, going through the stairs and taking best chance.
But it's said, right? I mean, only optimists make money in the market.
You have to be optimist.
You have to be an optimist.
You have to be an optimist. That's I think, best. God has made me die-hard optimist and a dreamer.
Right.
So that is what helps you. And then you have your own framework. You are unlevered. Don't speculate. What will kill you? Your 100 can become 50 for some time. But then, if you're taking that much risk of investing in equities, you'll also go forward.
Right.
Because index itself is going at 15%.
Risk reward both high.
So in 3 years, 5 years, first you'll make money double in 5 years, then you'll make it in 4.5 years, then 3 years, sometimes you'll make double in 1 year. So that's how the life goes on.
What do you think, of course you're a market veteran and you've spent decades in the markets now. What do you think is your legacy?
Legacy? अरे अभी तो हम बना ही रहे हैं. Legacy तो हमारे जाने के बाद होगा ना. But it's a good thing to think. See, we are building a company, Motilal Oswal, which is forever. The legacy will be Motilal Oswal itself, in the sense that it should be the place to work, people should love. It is a company which propagated wealth creation. This is a company where people came and became millionaires, and all the dreamers, they came in here. So that will be a place where I would think we can create a company which helps build businesses, mega businesses, finance. See, the country is going to scale like mad. Corporates will scale up like mad. The single IPOs will be of lakh crore and all. So, and you need lakhs of crores of funding to single companies. Who are there? We should be at the center. Whether it's equity ho, debt ho, raising ho, divesting ho, M&A ho, everywhere we should be there. We should be the most reliable place for the corporates as well as investors to go and kind of do the deal.
How has your relationship with money evolved over the years? And do you think, there's this common belief that money doesn't buy happiness? Do you agree with that?
No, it buys a lot of happiness. I can tell you this. It is very stressful to be poor, I'm telling you. It's very stressful. I know, I was never a poor guy. I was well off in the sense that not rich, middle class, but no problem. So when I was starting up, I had zero capital, but I had CA degree, so I could get a lakh rupees job anytime.
Right.
So you're not poor. You can get 3,000, 4,000, 5,000 bucks per month. But it doesn't solve the problem. I wanted to stay in Mumbai. Buying a flat, even that time, was a few crores. So how do you afford to buy a flat? So then your financial needs were far ahead of what you had in pocket. So if you don't have a house, so first requirement is a house. So do you have a good house? So and if you have a good house, it brings happiness. Then
so do you think that motivated you?
Yeah, everything. Of course, I loved the stock market. I think I would have not done anything but the stock market. Whether I would have been successful or not, that only time would have said. But money, once it comes, then you can buy a beautiful house, you can have your own car, you can have your own family. You can see, one of the biggest things is that you become financially independent. The moment you become financially independent, you don't have to take shit from anybody. You can do whatever you want to do. That is the biggest independence. You can afford to say no to what you don't want to do.
The freedom over your time.
The freedom of your time, freedom of what you want to do. So that is what I love. But I also thought that having a lot of money is a lot of fun. That is not so. Your happiness and fun is not proportionate to money you have. That is for sure. But first few $1 million is
will buy
actually,
you happiness.
Yeah, that is proportionate to your happiness, I would say.
So what does money mean to you now? Now that there's...
Now I'm thinking, we have this money-making machine kind of thing, small money-making machine in Motilal Oswal. But so making money has become now, is fun. Still I enjoy. Still I want to see bigger amount of money being made. But probably I think I want to evolve. I want to emerge as a good giver. I have to invent myself in giving. I have to spend more time on giving, and I have to do it in a QGLP way. I have to find my way of giving.
Yeah.
So that is a next fun moment for me.
That's incredible. Yeah. Thank you so much, Raamdeo sir. Thank you so much for your time. This was a very insightful conversation, and I'm sure our audiences will love listening to it.
Yeah.
Thank you. Yeah.